Welcome back, investors, to Ticker Time News. I'm Adam, and today we're talking about Snowflake, ticker symbol SNOW, S-N-O-W. Now, the cloud has been one of the biggest winners in the stock market in the last several years. Plenty of software as a service companies have seen incredible growth and returns. Now, when it comes to the underlying infrastructure and providers of those clouds, there hasn't been a pure play investment. Now, of course, there are ETFs like First Trust Cloud Computing ETF, ticker symbol SKYY, Global X Cloud Computing, ticker symbol CLOU, or even the Wisdom Tree Cloud Computing Fund, WCLD. You've even got companies like Amazon, which have grown from an e-commerce business, and Microsoft was first a software company. But one of the most compelling cloud infrastructure plays, and that's what we're going to focus on, cloud infrastructure, entered the public market last year, Snowflake. While the company is in its earliest stages, it has reported some of the highest metrics in the market. Every tech investor knows that not every company posts net retention figures of 168%. Snowflake is a company at the top of its class, being further propelled by cloud and data tailwinds similar to the tailwinds pushing another tech company, Palantir. But Snowflake has cost retail investors a premium valuation right from the start of its IPO. This led many to sit on the sidelines. Now, to entice investors off those sidelines, Snowflake made a remarkable statement at its recent investor meeting by forecasting 20x revenue growth by 2028. Have you seen any guidance like that before? 20x revenue growth in about 7 years. Now, many companies provide long-term models for investors. Snowflake's guidance for 2028 must be one of the furthest guides one will ever come across. What makes it even more impressive is the magnitude of the growth forecasted through this horizon. I'm just blown away. Snowflake's guidance suggests it could grow 20-fold by year 2028, both in revenue and in amount of million-dollar-plus customers. Are you finding value in this video? Then the best thing you can do is like this video, share this video, and subscribe to join our family of investors. Because we don't have the marketing budgets of the mainstream finance media or the clout to be propped up by YouTube. So your help is greatly appreciated. Now let's get back into it. Customers paying $1 million+ should provide the majority of its growth. Snowflake also expects that it will still be growing at 30% at the end of this period. Let's just think about that for a moment. I believe Snowflake has the ability to pull this off. Snowflake will likely surpass $250 million in revenue in its upcoming quarter, which means it would already be on a $1 billion run rate. And it would have to grow just another 10x in 7 years. That's a compound annual growth rate of just below 40%. As I mentioned already, Snowflake's net retention alone is over 160%, and the company has been rapidly growing its customer count. Now, there's another reason to believe Snowflake can meet this goal. The fact that there are already multiple precedents for this kind of long-term growth rate in this space. Even after racing past $10 billion in quarterly revenue, Amazon is still growing, and growing at around 30% exit compound annual growth rate that Snowflake is guiding for. Google Cloud is growing even faster, so it can be done. Clearly, cloud remains one of the hottest trends in tech, and COVID-19 has shown that there is still a large opportunity. If anything, it seems likely that Snowflake could reach its $10 billion target several years earlier. Let's say Snowflake achieves this by 2025. And let's compare this to another one of my high conviction companies, Palantir. It's also a company that's been extremely popular among investors. So, if Palantir reaches its own target a year ahead of schedule, and it still seems likely that Snowflake would be twice the size of Palantir around that same time and also still have a faster growth rate. Now, I know what you're asking. How does this then translate into valuation? Well, both companies have been quite volatile. Snowflake's market cap is around $75 billion compared to $50 billion for Palantir. While obviously the error bars in these multiple year forecasts are enormous, given the sheer magnitude of Snowflake's growth, this comparison actually shows that the valuation between these companies actually isn't all that different. Now, with a little back of the napkin math, if Snowflake has 2 times Palantir's revenue with a higher growth rate relatively soon, then it should have at least 2 times Palantir's valuation. Given the market caps I just mentioned, that could mean there could be about 20 to 25% upside in Snowflake right now. Yes, Snowflake trades at a scary, certainly to value investors, 64 times price to sales. But that's the nature of exponential growth. I have little reason to doubt Snowflake's ability to continue to grow at such a rate, and the 2028 guidance only adds fuel to that fire. So, to that end, if anything, one could actually make just as valid an argument that not Palantir, but actually Snowflake is the cheaper stock between the two. Those exponential growth rates will cause even the highest multiples like Snowflake's 64x to decline exponentially. Even if Palantir, for its part, doesn't slow down either, its current $1 billion run rate pales in comparison to the likes of Amazon's AWS. While these clouds have their own alternative offerings that compete against Snowflake, Snowflake is a leader in its segment with several divergent features, and should also benefit from the more recent trend of multi-cloud deployments. The trend underpinning Snowflake's growth is the cloud, the infrastructure. According to Snowflake's provided estimates, cloud spending was a bit over $100 billion in 2020 and is forecasted to grow to over $350 billion by 2025. From that view, Snowflake's share of that overall market still wouldn't be all that significant. Snowflake estimates its 2021 TAM, or total available market, at $90 billion. Snowflake expects to generate $5.5 billion on average from its over $1 million customers. For comparison, currently Snowflake generates just under $1 million from its Fortune 500 customers. These customers actually account for 25% of Snowflake's customers generating over $1 million. Snowflake's long-term model also expects some further gross margin improvement, from 69% to 75%. Remember the rough valuation where I said Snowflake seems undervalued at less than double Palantir's valuation? Well, some might say that actually both are overvalued, but Palantir, for its part, also has quite compelling growth prospects. Palantir's growth prospects can be seen by its relatively fewer number of customers, which indicates that Palantir, just like Snowflake, has a huge, perhaps even greenfield opportunity. And for those who haven't heard about a greenfield opportunity, it's a marketplace that is completely untapped and free for the taking. That's Snowflake for the cloud, and Palantir for big data analytics and AI. If you want to beat the market, then these are two companies that should be in your portfolio. Now, what do you think about Snowflake? Let me know in the comments. And details about the free Bitcoin and free stock are coming right up. And as always, if you watched till the end, you, my friend, are totally awesome. Thank you so very much for watching, and I will see you in the next video. You can help out the channel and earn free money while doing it. First, earn $10 worth of Bitcoin by signing up for a BlockFi interest account and depositing $100. Plus, the added benefit to using BlockFi is that you will earn interest of up to 8.6% annually on your cryptocurrency. Second, earn 2 free stocks worth up to $1,850 by signing up to Webull and depositing $100. Click the links below to get started.